Many people ask me for the secret to making a fortune in the markets, and I tell them the truth, but they usually do not want to hear. If the secret is not finding the next hot stock, it is knowing when the game has changed from winning to surviving. On September 3rd, 1929, the Dow Jones closed at 381, and newspapers said we had hit a permanent plateau of prosperity. Fast forward to May 7th, 2026, and the S&P 500 is hitting record highs above 7,300, but underneath the surface, the foundation is cracking just like it did nearly a century. A barge in debt is at a record $1.28 trillion, and the smartest people in the room are running for the exits when insiders sell 4 shares for every one they buy. They are telling you something that the headlines are trying to hide. Every dollar you spend on a up stock at these prices is a soldier you are sending into a battle you have already lost. Let us walk through the 5 stages of a market cycle so you can see exactly where we are standing. Right now, stage 1 is the wreckage where nobody wants to own stocks like back in 2009. Stage 2 is the acceleration where new tech like the cloud drives real earnings and real growth. Stage 3 is the mid-cycle wobble, like the COVID crash where things get scary but recover fast. Stage 4 is when your friends start asking you about stocks at dinner and index fund inflows exploding. Then we hit stage 5, which is the blow off top, where we are living today. Stage 5 does not mean the world ends tomorrow. It means the price is rising on nothing but momentum and borrowed money. The gap between what the price is doing and what reality is doing is the blow off top, where we are living today. Stage 5 does not mean the world ends tomorrow. Sign. A chur of a Trapin 1929, the price-to-earnings ratio hit 33, which was insane. At the time today, we are sitting at 41 on the Shiller ratio, which is 2.5 times the long-term average. History is a cold teacher, and she says that every time we cross this line, the next decade of returns is basically zero. Most people have a wrong mental model of how wealth is because they think it happens in one day. The 1929 crash actually took 33 months to hit the bottom. It was a slow erosion that wiped out 89% of the market value. A $10,000 portfolio turned into $1,100 because people could not stop hoping for a rally. The people who got slaughtered were the ones using leverage because forced selling is a one-way ticket to zero. Today we see the same sign. All flashing red on every dashboard. Leverage is at an extreme, and it is not just margin loans anymore. It is hidden in zero-day options and corporate buybacks funded by cheap debt that is no longer cheap. Corporate insiders just hit their most extreme selling ratio since 2021. The people with the information are selling while the people with the enthusiasm are buying. Even Berkshire Hathaway is holding nearly $400 billion in cash and treasury bills. Warren Buffett built a career on being greedy when others are fearful, but he spent his final years as CEO being the opposite of greedy. His successor is sitting on the largest cash pile in history because there is nothing intelligent left to buy. At these prices, you can disagree with the greatest investor of all time, but that is a very expensive bet to make. Every unnecessary risk you take right now is utinsho kaichuriga bunny drentena yuengon. In a stage 5 environment, defensive posture stops being a choice and becomes a mathematical necessity. This does not mean you sell everything and hide under your bed. It means you stop trying to time the exact peak and start cleaning up your portfolio hygiene. If one theme or one stock is 40% of your wealth, you are not an investor, you are a gambler. Trimming your winners back to a normal weight is not being bearish, it is being sane. You need to hold actual cash in money market funds because cash is the only thing that let us. You buy the panic. The investors who get rich after a crash are the ones who had liquid cash on the day the music stopped. You need a written plan right now for what you will buy when the market finally corrects, because the hardest part of investing is not what you do at the top, it is what you do at the bottom. Most people freeze when the blood is in the streets, but the prepared investor acts with precision. The clock is ticking just like it was in September 1929. The question is not whether you can predict the exact day of the crash. The question is whether your family and your future can survive being wrong about the peaky. See so many people chasing that last 5% of gain while risking 50% of their capital. That is not a trade Charlie Munger would ever make, and neither should you. Wealth is built by avoiding the big mistakes, not by being a genius every single day when the asymmetry of risk shifts. You have to shift with it. Do not let the greed of the crowd dictate your financial destiny. The crowd is almost always wrong at the extremes because they are driven by emotion instead of arithmetic. We are watching the same photograph from 1929 being developed in real time. The only thing that has changed is the resolution and the speed of the data. The underlying human psychology of greed and fear remains exactly the same. If you can stay calm while everyone else is losing their minds, you will own the future, but you have to be willing to look wrong for a little while to be right for a lifetime. The applause for being defensive always arrives late, so do not look for it. Now focus on your own balance sheet and your own margin of safety. Every dollar you save today is a brick in the fortress of your independence. Do not throw those bricks at a moving train just because everyone else is doing it. Want you to be the one standing on the sidelines with a giant pile of cash when the fire sale begins. That is how the game is played at the highest level. It is boring and it is slow, and it is exactly how you win. If you want the excitement, go to a casino. If you want wealth, go to the ledger. The data is verifiable and the pattern is clear as day. Reduce your leverage, hold your cash, and stop believing in permanent plateaus. The world is a cycle and we are at the very top of this one. Make your moves now before the exit gets too routed for you to get out. I'm going to keep reading the tape and sharing the truth, even when it is unpopular, because I care more about your solvency than I do about your likes. But if you do value the truth, then stick around because we are just getting started. The next few years are going to separate the gamblers from the real investors. Make sure you are on the right side of that line. Stay boring, stay patient. Peace. The fees market can stay irrational longer than you can stay solvent. If you are betting against it, but if you are just sitting in cash and waiting for the right price, you have all the time. In the world, time is the ultimate luxury of the wealthy investor. Most people are slaves to the monthly statement, but you should be a student of the decade. When you look at a chart of the last 100 years, the crashes look like tiny lie. But if you were living through them, they felt like the end of the world. The only way to survive those blips is to have a plan that does not rely on constant growth. They want you to imagine your life without the stress of a falling portfolio. Imagine having the capital to buy your dream home for half price because you were patient. That is the reward for the work we are doing to date. Is not about being right on a Tuesday. It is about being free on a 50-year timeline. Not let the noise of 2026 distract you from the logic of a century. Keep your head down and your eyes on the numbers. The math will never lie to you. Even when the politicians and the brokers do, you are the master of your own capital and the CEO of your own future. Act like it and stop asking for permission to be defensive. The system is designed to keep you invested until the very last second. I am here to tell you that you are allowed to walk away from the table whenever you want. And right now, the table is looking very lopsided. Take your chips and wait for a better hand. It is the smartest play in the book. You see people day trading their life savings away while the big boys are quietly moving to treasury bills. Do not be the liquidity for someone else's exit. Be the person who provides the liquidity when nobody else has any. That is where the generational wealth is. Madi, I'm proud of you for sticking through this video and looking at the hard data. Most people would have clicked away to watch a prank video by now, but you are different because you want the truth. And the truth is that the party is winding down. The lights are starting to flicker and the music is getting a bit distorted. It is time to find your coat and head for the door. There will be other parties and other bull markets, but you only have one life and one pile of capital to protect. Not wasted on a stage 5 blow off top. Keep your discipline and keep your vision clear. The road ahead might be rocky, but for the prepared, it is full of opportunity. We'll be here to help you navigate whatever comes next. We are going to win because we are playing a different game than the rest of the world. Are playing the game of wisdom and we are playing it to win. Thanks for watching and thanks for being part of this community. We'll see you in the next one where we will look at the next piece of the puzzle. Until then, stay safe and stay smart. The math is on your side if you are on the side of the math. Peace out.